Welcome to Lausanne and our coverage of the Financial Times Global Commodities Summit. With me is Greg Page, Chairman and Chief Executive of Cargill. Thank you for being with us.
Good to be with you.
The world economy has weathered three major price spikes of agricultural commodities over the last 5 years. Cargill is the world's largest trader of agricultural commodities and is in a better position than anyone else to understand what is happening. What is a new situation? Should we be concerned about our prices of agricultural commodities?
Yeah, I think in each of the moves there were different elements, but there are some common themes, and I think one that's important for your listeners to think about is the distance between complacency and crisis has become much narrower. And so the same small changes in supply versus what we might have anticipated have led to outside changes in price. So people always comment on the price spike up, but what's missed is in two of those events there was an enormous spike downward in spite of very modest changes in supply.
Is that possible this time? Because US farmers in particular seems to be reacting to these high prices with a massive planting.
Yes, that there is an adage in our business that price is the best fertilizer, and I think we've been observing that. What's interesting in the context of complacency coming very quickly is it's still frozen ground in the US, and yet the presumption of a very large crop is playing its way through the markets. And so we're seeing a certain comfort with the world's food supply for 2013, and certainly the prices over the last month have reflected this complacency or comfort that people have, in spite of the fact that the Northern Hemisphere crop really isn't planted yet.
Over your long career in Cargill, you have seen many ups and downs on the business. But the last 10 years, the profitability of Cargill and in general of the trading industry has increased. Yeah. How it looks the next 10 years?
Yeah. So for us, the big factor in the last 10 years was the growth in per capita incomes, and particularly the per capita income of people between $2,500 a year and $10,000 a year.
So that's China, India, Brazil.
Indonesia. So that demographic grew rapidly, and with it the need for the kinds of services that we provide. And we tend to think of ourselves as a service business. And so it was really a demand-driven prosperity that we enjoyed part of. And so I think the answer to your question, how the next 10 years look for Cargill, is how will that same factor evolve over the next 10 years? There are people that believe more than 1 billion people will be added to that group of $2,500 to $10,000 a year. If that were to happen, I think the next 10 years are very good for Cargill.
What do you think is going to happen?
I think that the needs are there. If you travel the world and you go into these communities and see what the world might provide to them in terms of standard of living, be it education or housing or healthcare, the need is there for many more people to enter that $2,500 to $10,000 segment of the population. And so do we have the governance in place? Will we have the fiscal discipline to do those things? Will we trust each other enough in terms of trade to allow comparative advantage to make us all richer? Big questions. I'd like to answer in the affirmative to each of those, and I think the potential is there. The potential for policy missteps is also there, and I think we would all suffer as a result.
Cargill is a privately owned company owned by family. Has been for 150 years around. You are celebrating your anniversary very soon. It's often said that on family-owned companies, the grandfather builds the company, the father consolidated, and sometimes the grandson makes the mistake and spends the money. But you have avoided that. The Cargill family, the Macmillan family have avoided that. We're in the 7th generation now. What was the important element that they were using that just make them so successful?
Yeah. Well, certainly I wasn't there for every conversation between father and daughter and father and son, but I think at each generation, the written history of the company and the lore of the company is that each of their parents spent a significant amount of time explaining the heritage and the trust that they held for the company. And so I think we have been very fortunate, and I would agree with you, statistically we are an anomaly. But I think anomalies happen as a result of effort. And I think at each generation an effort was made in terms of estate planning and thinking about how to provide. I think that the fact that the family has always had a very modest dividend policy which allowed the company to grow faster than the population of the family has been a factor. And so there's no one thing that contributes, but I think a well understood sense of responsibility to the company and a very frugal approach to the way in which they allowed the company to reinvest significant portion of the retained earnings are probably two underpinnings that have really allowed us to keep moving forward into our 7th generation.
Gregory Page, Chairman and Chief Executive of Cargill, thank you very much.
You're welcome.